How much do we need to accelerate that at a moment in time where the US companies, your Fords and GMs, are still trying to catch up with Tesla? And Tesla has one great asset. Elon is a phenomenal entrepreneur. And I think that don't lose sight of the fact that Tesla makes a great car, but there's an opportunity at Tesla to create the software platform for the future of automobiles. The self-driving car, good chance will first happen at Tesla.
In a recent CNBC interview, Billionaire founder and CEO of Citadel, Ken Griffin, gives his insight into the reality of the Tesla business, as well as how it will continue to operate in the EV market. Ken Griffin isn't typically concerned with battles over market share, but when it comes to EVs, it's a different story. After China's largest EV maker BYD managed to outsell Tesla in the fourth quarter, Griffin said that he fears the West will need to find a way to keep up with cheap Chinese EVs that are flooding the market. The EV market enthusiast has always had a keen eye out for Tesla, following its growth and looking forward to what lies ahead for the car company. Today we'll explore some of the concerns that Ken Griffin has, the challenges he perceives are on the way for Tesla, as well as the possible ways Tesla can overcome the obstacles. Let's dive in.
In the pro-independence faction of the Taiwanese political class, and yet China was able to be very thoughtful in its choice of words and to I wouldn't say embrace the moment, but to play through the moment in a constructive way. And we need that tone in this world. If there were a rupture around Taiwan, it would be catastrophic to both the Chinese and the American economy. And by catastrophic, I think you're looking at Great Depression circumstances.
If there were some sort of, you say rupture, a war, some sort of attack?
If we lost access to Taiwanese semiconductors, how many weeks until Tesla stops making cars? Or GM? Or Ford? Or Boeing stops making planes? Those chips are used in every part of our economy. Estimates range from a GDP hit of between 8 and 10% if we lost access to Taiwanese semiconductors. So it's really important as a matter of national economic security that we're able to maintain peace in that region of the world.
What about American competitiveness with China? You touched on that briefly. Elon Musk said last week the only thing stopping Chinese EV makers is protectionism, basically trade barriers. BYD dethroned Tesla in the fourth quarter as the top EV seller. And then just this morning, GM came out, reported a steep decline in operating income, in part due to losses from its EV unit. What do you make of the state of American competitiveness with China, especially as it pertains to some of our key industries, EVs, chips, et cetera?
So solar, EVs, consumer electronics, these are all areas in which the Chinese have done extraordinarily well from a competitive perspective. And watching BYD surpass Tesla in global sales was a bit of a heartbreaking moment. But we often lose sight of the fact that the Chinese economy represents 1.4 billion people. So they have a huge advantage when it comes to simple economies of scale, combined with a strong education system that produces 4 times as many STEM graduates. We've got a real competitor in China.
Griffin's current stance on Tesla seems to be a carefully balanced act. He acknowledges the company's innovation spirit and is also pretty sure it's got a positive potential to disrupt the auto industry. In a 2023 interview, he even conceded that Tesla is light years ahead of its competition when it comes to technology. However, he remains cautious on the valuation, suggesting that it might be inflated compared to its fundamentals. This cautious optimism leaves us wondering, is he secretly bullish on Tesla's long-term potential, or simply hedging his bets? Well, we can't really be too sure. However, his latest comments do give a pretty good idea of how he currently perceives Tesla. Hey guys, welcome back to Tesla Tomorrow. Earlier this year, BYD, which has been aggressively expanding its operations internationally, revealed it sold a record 525,409 EVs in the fourth quarter of last year. Meanwhile, Tesla delivered just 484,507 over the same period. Reacting to this, Griffin noted that China has used its size and relatively low labor costs to dominate many key industries in recent years, including solar, EVs, and consumer electronics, to make them a serious economic competitor to the US. He also added that exports often lose sight of the fact that the Chinese economy represents 1.4 billion people, so they've got a pretty huge advantage when it comes to simple economies of scale, combined with a strong education system that produces 4 times as many STEM graduates. Griffin went on to argue that some of the West's green energy policies might also end up benefiting Chinese EV makers unless trade barriers are put in place. But what could this mean, and what message is Ken Griffin really trying to pass along? Let's find out. But before we do, if you're liking this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. Ken Griffin and Tesla have a relationship one could describe as complicated. It's a dance of respect tempered with skepticism and a seasoned dash of financial maneuvering. To actually understand how these two got here, let's rewind a bit. Griffin hasn't always been the biggest Tesla cheerleader. In 2019, he was pretty vocal about doubts for it, calling the company's valuation insane and predicting its eventual demise. He even went as far as to short Tesla stock, betting on its fall. But then something changed. In April of 2020, amidst the pandemic's chaos, Citadel revealed a surprising 4.3% stake in Tesla, making it the 4th largest institutional shareholder. Talk about a plot twist, adding another layer of drama to Musk's unconventional leadership style. Remember the infamous Twitter poll of November 2021, where Musk asked his followers if he should sell 10% of his Tesla shares? Well, Griffin, who's a believer in traditional corporate governments, was openly shocked by this move, calling it a whole different world. That episode highlighted the contrasting approaches of the two billionaires, further fueling the intrigue surrounding their relationship. However, lately, Griffin's bullishness on Tesla seems to be tainted with a bit of fear and concern, particularly as Chinese EV makers continue to up their game while taking Tesla's place as the EV market leader.
Will 2024 be the year when Chinese and other Asian electric vehicles conquer Europe and the US? China's biggest EV maker just overtook Tesla in terms of worldwide sales, and Vietnam's VinFast is opening its first dealerships in the US. So to discuss how we've got here and what it all means, I'm joined by Peter Fintel from technology consultancy Capgemini Engineering. Thanks a lot for being with us, Peter. The Western electric car market appears to be changing, doesn't it?
Absolutely. First of all, thanks for having me, Rob. Yes, the Western European car markets, they are indeed changing. Yeah? So over the past years, those markets, they were a growth market starting from small numbers. Yeah, they were fueled by subsidies and attracting to higher end buyers. And now, as electric vehicles are about to hit the mainstream, the main market, yeah, we also see that subsidies get cut down, right? And in the next year, we need to see how consumers, with all the headwinds they are facing for their sentiment. Yeah, let's speak about crisis around saving options and so on. How they will further adopt electric vehicles. Yeah.
And what we're, of course, going to see over the next year is where those electric vehicles are coming from. So 2023 saw electric vehicle sales surge to new heights, of course. EVs made up 18% of all car sales worldwide. Let's just have a look at what were the best sellers around the globe, though. Tesla's Model Y is actually the market leader. Over 700,000 were sold between January and August of last year. That's more than double the sales of the number 2 selling vehicle, also from Tesla, the Model 3. But third and fourth for global sales are both models made by Chinese manufacturer BYD. And Chinese models also made up much of the rest of the top 10, I can tell you. The highest ranked European car is Volkswagen's ID.4, which actually only came in at number 8. So all of that data suggests that Tesla is globally dominant when it comes to electric car sales. However, something very interesting happened in the final months of last year. In the fourth quarter of 2023, Chinese automaker BYD delivered 526,409 fully electric vehicles, thanks to aggressive end-of-year discounting strategies, whereas Tesla reported just 484,507 cars sold in the same time period. So it's a similar amount, but Tesla behind BYD. So the EV market at the start of 2024 is actually looking rather different to it did at the start of 2023. So let's bring back in Peter Fintel from Capgemini Engineering. How has BYD managed to creep up and overtake Tesla on fully electric vehicles?
I think what we see now, this is they are harvesting the fruits of a longer term strategy. Yeah? So the nice figures on the last quarter. They are definitely the result of a good product portfolio and competitive products at nice prices. This is not something that happens overnight, right? So they have invested a lot in their product portfolio in various segments, right, from higher end to entry level, yeah, and now they are rolling it out to clients, and clearly they are benefiting also from a strong domestic demand.
Imagine a factory the size of Texas churning out iPhones at lightning speed. That, in a nutshell, is the potential China holds thanks to its massive population and impressive education system. And it gives us a huge advantage when we come to look at economies of scale comparing the US and China. As of the time of this video, China's population's a mind-boggling 1.4 billion. That's like having the entire population of the US, Mexico, and Canada combined all living under one roof. Not literally, but you get the idea. This sheer size translates into a gigantic pool of potential workers, consumers, and, well, everything else. So imagine the production lines, the research labs, and the endless possibilities that are around. But that's not even all. China isn't just about quantity, but it's got quality too. The country has been investing heavily in education for decades, churning out millions of skilled professionals every year. What this means is that China's got engineers, scientists, and managers that are needed to not only run those mega factories, but also innovate and push boundaries of what's possible. It's like having a giant, well-trained army ready to conquer the economic battlefield. But you may ask, how does this translate into economies of scale? It's simple. China enjoys low production costs. With so many people working, the country can spend fixed costs, such as rent or machinery, and then spread them out over a larger volume of goods, making each item cheaper to produce. It's also got better research and development.
Please show me Tesla. That stock was down 12% yesterday after Elon Musk warned of a production slowdown in 24. Minor leagues bounce today. Former Tesla board member Steve Wesley is with me now. Steve, I want to talk about the Chinese EV maker BYD. They just became the top car brand in China. Are they going to dominate Tesla in 2024? Is this year their year, BYD?
Well, it could well be. And again, the big picture here, Tesla has just posted a dramatic $25 billion quarter, the biggest in their history, $97 billion for the year. They sold 1.8 million cars, and they have an astonishing 50% control of the American marketplace, more than all other EV sellers combined. But as you point out, Tesla's growth has slowed, 71% in 2021, 51% in 22. This last year, down to 19%. At the same time, BYD's come up like a rocket, selling 70% growth. They did 1.6 million vehicles next year. They're clearly going to pass Tesla this year. So the big smackdown is BYD going to be able to successfully break into the American marketplace where they sell no cars today? They've already launched in Europe. You've got to ask yourself, do Americans and Europeans want to buy a Chinese-made car? I think with the IoT devices in cars today, that's going to be a big push. Yeah. We'll see.
But BYD, their cars are much cheaper than Tesla's, aren't they?
Well, it's exactly right. There's an interesting dynamic here because the average Tesla car is roughly twice the price of BYD's. But BYD is taking that mid-market, low market, from 15,000 to 30,000. They're growing rapidly, not just in China, but starting to move in Southeast Asia, throughout South America, and Mexico. But Tesla has got to do something to ramp up its revenues. And I think the $25,000 car that Tesla's been talking about for some time has to be front and center. Musk said yesterday he will get that out by late 25. He has to execute on that. If he does, it will ramp up sales in US, Europe, and allow them to enter new markets. Elon's already said they may put their next manufacturing plant in India. But this is the smackdown for global EV dominance. It is BYD versus Tesla right now, and it could go either way. It's going to be an interesting one to track. Investors need to pay attention.
And with a vast pool of talent, China can easily heavily invest in R&D, leading to faster innovation and more efficient product processes. It's like having a million minds working on the same problem, and they're bound to solve things quicker. Likewise, China is also enjoying the learning curve benefits. With so much production happening, workers get better at it fast. The consistent learning process and improvement cycle leads to even better costs, which are lower and higher quality over time. Elon Musk acknowledges the EV dominance from China globally, expressing concerns about Tesla's competition as Chinese makers make strides to take over the EV market. But of course, it's not all sunshine and rainbows, and that is where Tesla comes in. While China's size and education system may give it a pretty big advantage in the world of economies of scale, the country also faces challenges like income inequality, environmental concerns, and the need to transition from low-cost manufacturing giants to more innovative economies. Although the Chinese market is booming, the homegrown brands like BYD and NIO are charging in. Tesla does remain a formidable force though. First up, Tesla's got brand recognition. And that's pure gold. Think sleek cars, futuristic tech, and the ever-present Musk, a walking, tweeting advertisement. This brand recognition translates to loyal customers who see Tesla more than just a car company. They see it as a statement, a symbol of innovation. It's like the Apple of the EV world. Likewise, speaking on innovation, Tesla's got the tech chops to make even the most advanced sci-fi enthusiasts drool. They've got autopilot, while still under development though. It's miles ahead of all of the competition. And let's not even get started on the supercharger network, the envy of every EV owner on a road trip. This tech edge gives Tesla a clear advantage, especially those who crave the cutting edge of electric driving.
And Elon's right that the West has to grapple with the issue, Europe in particular, California, trying to achieve a very, very different future in terms of how we consume energy, and an EV-led future in particular. California wants no internal combustion cars in the foreseeable future. Are we going to make that happen by buying Chinese vehicles? Because that's the most cost-effective way to do so for American consumers.
What do you think?
I think that's a really hard pill to swallow.
So what would you suggest from a policy standpoint?
From a policy perspective, how fast do we need to push the drive towards EVs? How much do we need to accelerate that at a moment in time where the U.S. companies, your Fords and GMs, are still trying to catch up with Tesla? And Tesla has one great asset. Elon is a phenomenal entrepreneur. And I think that don't lose sight of the fact that Tesla makes a great car, but there's an opportunity at Tesla to create the software platform for the future of automobiles. The self-driving car, good chance will first happen at Tesla.
The Chinese EV makers are coming in hot with government support, lower costs, and even wider ranges of modes and models that cater to different budgets. And that's probably why Ken Griffin is so concerned. However, we've got to remember that the EV market is young and rapidly evolving, and Tesla still has the lead in terms of brand, tech, and data, and the Chinese players are not even close. So it's going to be a pretty exciting race to watch, with both sides pushing the boundaries of what's possible. Only time's going to tell how this Tesla-Griffin saga unfolds. Will Ken Griffin's bullishness on innovation outweighs concerns about valuation, and will Elon Musk continue to disrupt the industry with unorthodox methods? We'll find out in due time, but one thing's for sure is that the dynamic of Tesla's business is guaranteed to keep us entertained for years to come. Also, the future of electric driving is looking pretty bright, and it's going to be a wild ride, so grab your popcorn and enjoy the show. But what do you think about these comments? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.